Welcome back, and you're watching Commodity Champions. We're talking about gold, and another thing that the industry will be watching out for is the policy rollout from the government for the Bullion Bank and the Gold Spot Exchange. Remember, it has been in conversation for last 3 years. In last 1 year, though, we have seen the process speed up, but it still is some time away. And why is the question that we're going to ask Mr. Rajesh Khosla, who's Chairman Emeritus, MMTC PAMP. Mr. Khosla, hi, thank you so much for joining us. I know I have been talking about spot gold exchange and Bullion Bank and gold policy with you for a very long time now, but we seem to be getting closer to the reality, isn't it?
Well, on both, there is now complete clarity in government, and I believe various regulatory bodies have been consulted. I would have hoped that it would have been announced prior to the elections, but I would imagine now that there's a code of conduct, we should see this the moment the elections are over.
What would you say on how far are we from this? Because we understand that the structural details and the regulatory details is something that are still being worked out.
I really think we're making a mountain out of a molehill. If you look at bullion banking, it is nothing else but treating this currency called grams of gold. We do rupee banking. Rupee banking requires vaulting, so you have the RBI currency chests, and you have a rupee clearing with the Clearing Corporation of India. The same way, when you apply the principles of banking to a new currency called grams of gold, you need allocated vaults, and you need a clearer. The Clearing Corporation of India has said we are happy to clear gold also. So I don't think clearer is an issue. Insofar as vaulting is concerned, there are vaulting guidelines issued, but I don't think that's much of an issue. The stumbling block is going to be a taxation treatment, because how do you tax a transaction that does not have a monetary value? You're now transacting in terms of metal. And that today is the dilemma that the regulator is worried with. How do I address this when I have an entire system that only looks at rupees or dollars, as the case may be, and suddenly there's this new currency called grams of metal?
Okay. You know, when you also talk about banks being part of this, how much readiness will they really have to take in? Because we understand that not too many of these banks have the expertise that it needs to be in commodities or gold. So whether it is about, clearing it, or the risk management, quality, holding, leveraging, taking the risk on, are we there?
That's now the element of bullion banking. And bullion banking, essentially, when you talk about risk management, banks today do risk management of currencies. And they've got sophisticated hedging techniques and counterparty risk evaluations. Now there's a new currency, it's grams of gold. So the underlying strategy behind hedging, the underlying strategy behind doing risk management doesn't change. So we've spoken to banks, and banks are saying we're only waiting for government to say yes. So they're ready.
Okay. So what is your sense as we move ahead from here? How organized or how close are we to actually seeing gold as an asset class?
I would say within this calendar year.
The policy is going to be out, or we will actually see it happen?
Wait for a policy. This has been discussed with banks and regulators. Everybody's cleared it. It should have been announced early. Now it can't. So if it's announced in July, we're going to be ready by December. You will certainly see it this calendar year.
And all the financing issues that this industry seems to be facing, would you see that also go away? Because if we are looking at newer reforms, newer industry.
Well, financing issues relate to managing counterparty. They relate to managing customer risk. That's a different chapter altogether. This is not going to solve financing issues. What this is going to solve is the ability to account for in terms of metal, rather than accounting for it in terms of rupees. That's going to be the fundamental difference.
Sure, okay. One final question then. As we are readying ourselves for this, and you expect this to happen in this calendar year, what are the prerequisites? What is the preparedness? What do we need to tick first before we actually reach there?
Well, you needed a clearer. The Clearing Corporation has said yes. You needed a software. They've said yes. You needed vaulting. Vaulting guidelines have been issued, and I know for sure Brinks is upgrading vaults. And little known fact, an MMTC PAMP has been functioning metal clearing for the last 3 years. So the systems are in place. It's not an issue. It's just saying, yes, guys, get on with it.
So are we looking at gold standardization, good gold delivery, and are we also looking at one national uniform price of gold?
You will never ever have one uniform national price of gold. You will have a base price of gold at a particular location, whether it's Ahmedabad, Mumbai, Delhi, and then you will have what we call locational premiums.
Okay.
Because you're looking at a price of gold at one centralized location. Let's assume financial center is Mumbai. And therefore, when you pick gold from Mumbai and you want to deliver it to Chennai, there is something called a location premium.
Okay.
The same is true when you pick up gold local London, you want to take it to local Zurich, 15 cents is the premium. So if you look at Europe as one country, there are location premiums for each city. The same way, India will have location premiums for each city, starting from one base price of gold. That's the key change.
All right. So that is what we really are waiting for in the Indian markets in days or months to come. Mr. Khosla, thank you so much for your time.
You're welcome.
Thank you. Hi, and joining me now on the show is Mr. Saurabh Gadgil of PNG, and we will discuss about the gold demand in the Indian markets, which has been a bit dismal in the last couple of quarters. Saurabh, hi, thank you so much for joining us. What is your sense, even as we have seen an elongated wedding season this time around, the gold demand hasn't been so great, especially with the volatility in the gold prices. How do you see that working for the Indian markets?
You know, Indian markets for the last 2.5 years have seen a lot of turmoil happening in terms of, right from demonetization, there's been a lot of GST, and there's been a lot of sentimental change happening on gold as a commodity, as a consumption unit. But if you track it for the last 6 months, I think it's a positive trend. Yes, demand is not what people expected it to be, but demand is rising. You're seeing the confidence back in the consumption of people. The wedding season has been good. I would not say it has not been, it's not been a super duper season, but it's been a good season. And another factor has been the price hike. When gold cost 30,000, people were kind of, wait and watch. When it went to 32,000, people started buying gold because the trend turned bullish. It has now again come on levels of 31,000 category. So the little price movement which is affecting demand. But overall, when you look at things, I think we are heading for consolidation. And from here, I think demand should be steady and should see growth. Okay. We've also seen diamonds, other metals also picking up. There's been a lot of demand for color stones. So as an industry, when you look at the jewelry industry, we are saying that the burst is over. This is not the best phase.
Tell me, are people buying for investment, or is it more like wearable jewelry which still is getting picked?
Yeah, so investment demand is still not picked up.
Okay.
What we're seeing is jewelry demand. But then as jewelers, we're happy with that. Because, there's one side to it that Bullion bought is capital for tomorrow. So that's going to come back in and make jewelry. But today, people are buying jewelry. So what is helping?
Share numbers with us in sense of what is the kind of spend that we are seeing right now, whether it is gold, diamond, gems, jewelry, etc. Is there a final number that you are seeing quarter on quarter that we see?
See, in terms of, if you look at every jeweler, he has an ATV, per ticket size of customer. Now that has gone down a little bit. So typically, average chain stores have an ATV of around 38 to 40,000 rupees gold, which has now come down 32, 33,000. So what it means is, yes, your ticket value has gone down, but number of customers have gone up. So our end result is the same or slightly positive. So we have seen a growth of around 5 to 7% over last year. So most of our chain stores will be in the category of 5 to 10% growth on top line. But you will see a lot of new customers being added to it. So that's a positive factor. We had seen gold as when you look at gold, when prices go up, typically you see a lot of gold being sold back. That has not happened as yet. So that is something which that creates a sentiment people are still bullish on gold. Because if they had felt that, okay, it's a price has reached, they would have started selling gold. That is not happened. People are still buying gold. So on that number, typically every chain store has around 25% of gold, which comes as URD purchase, which comes from customers. That ratio is still the same on that percentage. Diamond, again, a lot of chain stores used to be in a category of 10% diamond, which is maintained on that level. So you're seeing one side is positive is the pressure on pricing has gone away. Discounting has gone away. People are looking more at the price value of it. So that is helping us. And we are seeing that the top line growth is not too much in terms of value, but we are seeing a lot of new customers being added to the fold, and this will be helping in the next 4-5 years as time goes by. So we're seeing it as a good sign. We're seeing a sign of consolidation, and we're seeing that as prices gradually rise up, people will end up buying more and more. Plus, the next couple of months is going to be election time, so that kind of has an impact on demand. But it's also festive time because there's Gudi Padwa, Akshaya Tritiya. So we are seeing that.
Do you actually see buying on election years? Is that how the pattern has been?
See, normally what happens is during election years, people would typically look at encashing gold because of the needs for liquidity. So, but till now we haven't seen that pressure coming up.
Okay.
So we hope that it doesn't continue that way, and the buying demand continues, selling pressure doesn't come away, and we have festive season, Gudi Padwa, Akshaya Tritiya. So if this goes on well, coupled with the wedding season, I think we are set for the year. And if a government which is stable comes in power, I think very good time for industry ahead, for retail. I think for the entire India consumption story, it's a very positive step ahead.
So are you guys really making inventories right now? Because this festivities and wedding season doesn't seem to be getting over anytime soon.
See, nobody's overstocking because there are two factors. One is, you don't want the capital cost to rise up. Secondly is the entire gold pricing. So you want to hedge yourself against gold. So people right now, if you look at the entire movement, is about being effective and being efficient. So stock turns are being looked into, but nobody is trying to overstock. Yes, but we are looking at spreading the design a bit higher and trying to see how you can turn the stock faster. So that is where the entire focus is on. But yes, there's a chunk of people who believe that in the wedding season coming ahead, prices could rise up, and you're seeing some people who are also, like you said, holding gold and looking at encashing it during the festive time.
Right.
But I think it's anyone's guess, and as jewelers, we prefer not to speculate, but to hedge and to do it for business. So I think we are prepared for it. We are hoping for a good season ahead, and we're hoping for good, stable government in the coming elections.
We hope all of that too, Saurabh. Thank you so much for joining us, and thank you for your time. And
Most pleasure.
thank you.